This is Craig Haugard with your Financial Issues Ag Update. In spite of the rapid planting pace, corn was able to close a bit higher yesterday as the Trump administration stated that they wouldn't impose new economic sanctions against China over the way that they handled the coronavirus if China abides by the Phase 1 trade agreement. U.S. corn is very competitive versus other origins around the world, although demand is a concern. The shelter-in-place policies instituted globally have cut into meat consumption and thus corn consumption, and of course energy and ethanol has been hurt strongly as well. There's a strong possibility that anywhere between 5 and 15 million metric tons of corn demand could be lost, and thus we'd see the world carry-out swell. Ethanol margins remain negative in the U.S. and unprofitable in Brazil as well, which is certainly a concern. As I record this, the overnight spot corn futures are trading unchanged. The Trump administration's statement about not imposing new economic sanctions against China, coupled with the announcement of a sale of 378,000 metric tons of soybeans to China, pushed beans to a higher close for the session yesterday. In spite of this sale, Brazil still has a price advantage over the U.S. when it comes to exporting beans to China. In fact, Brazil's April soybean exports were an all-time record for a single month, coming in at 16.3 million metric tons, or roughly 600 million bushels. The previous record had been set back in May of 18 at 12.35 million metric tons. In the overnight trade, spot soybean futures are trading a penny higher. The wheat market traded both sides, weighing spring wheat planting the slow pace against possible freeze damage in the winter wheat crops. Prices also drew some underlying support from dryness in the southern plains of the U.S. and longer-term dryness in Europe and the Black Sea region. At the end of the day, Chicago and Minneapolis were a bit higher, while Kansas City closed a touch lower. In the overnight trade, we have Chicago and Kansas City both down a nickel, while Minneapolis is trading 2 cents lower as I record this. Cotton prices finished lower, with the July futures down 75 points to settle at 53.58. In the overnight trade, we have them down an additional 14 points. And livestock futures retreated on Tuesday. June live cattle futures ended the session $1.60 lower, while August feeder cattle were 72.5 cents lower at the close. Lean hog futures lost ground as well, with the June futures down $1.22.5. Class 3 milk futures, on the other hand, kept their winning streak alive, with the June futures closing 69 points higher as they settled at $13.63. As I record the overnight trade is trading 7 points lower. And finally, meat cutout values continue to explode higher as we try to figure out a price that'll ration beef and to a lesser extent pork. We had choice beef boxes $18.77 higher as they closed at $428.82, while selects were up $33.88 as they settled at $410.54. Pork carcass values were $5.77 higher as they closed at $113.58 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.